Alright, I did my current event project on waste management's approach at tax cut. My name is Owen Nemeth. So if you don't already know, waste management is simply just a trash business. It keeps the waste organized for the public by, of course, giving people trash cans, throw their trash away in it, send a trash truck to come pick it up, bring it to the dump. Very simple process, but it's founded in 1968 by Wayne Huizenga, Dean Buntrick, and Lawrence Beck, and is now run by their CEO, Jim Fish. What exactly is a tax cut? A tax cut is simply just a reduction in the amount of money that you have to pay the government in taxes. A tax increase would be the rise in the amount that you have to pay the government. So it's just the opposite. A tax increase is unbeneficial towards a company, while a tax cut is very beneficial because you simply get to keep more money. It's more margin for profit. You have less cost now. So also very simple, but very, very beneficial, especially in such a drastic tax cut like what's happening now. President Donald Trump actually just passed a new tax law reducing the federal corporate tax rate from 35% all the way to 21%. Waste management alone benefited roughly $275 million from this alone, the share going from $3.97 per share all the way to $4.05 per share. So how is waste management dealing with this extra money? Jim Fish stated that most new companies use that money to buy back parts of their stock or shares of their stock. And however, Jim Fish is taking a little bit of a different approach to this, much more beneficial in my opinion. He's giving it back into the economy, putting about $70 million straight back to the employees via bonuses. $2,000 bonus was given to about 34,000 employees. So, $68 million. It's a lot of money to go back into the economy, back into spenders' pockets. As well as that, just about $150 million gained from that tax cut is going to go back into the economy via being spent on equipment for the company. So, it's going to be given to other businesses, and simply just putting it back in the economy. So how is this going to affect the economy? Well, main thing being it's putting $200 million back right into the economy, which that's a lot of money. I mean, putting $70 million into the employees' pockets to then they can go spend it. They can go spend it at different places. Also, the $150 million that was spent on equipment and stuff goes to other producers. It's just a chain reaction of essentially just getting that money back into the fluctuation of the economy. Also, the $150 million spent in equipment and expanding the business is then eventually, in the long run, going to benefit shareholders by hopefully rising stock, of course. So that's just about it. There's my sources. There's my article I did it on, and that's just about all I have. Thank you very much.